Our government's got a problem. The budget deficit is getting bigger, and politically, it's going to be really, really hard for them to raise new taxes and enact tax reform. So the ATO has been tasked, we think, with collecting all the outstanding taxes that are currently there. Therefore, that's why we think in 2026, the ATO is likely to get more and more aggressive in its approach to tax. This matters to small business owners in particular because the biggest tax gap is in the small business market. What's a tax gap, I hear you ask? Good question. The ATO regularly does reviews and research into what it thinks the gap is between the amount of tax it thinks it should receive and the amount it actually does receive based on statistical analysis and lots of data matching and this kind of stuff. And so the biggest gap is, funnily enough, with the small business market. It runs at about 15% in 2023. And what that represents is billions and billions of dollars of tax the ATO thinks it's not collecting. Secondly, the ATO has also got billions of dollars in uncollected tax. During the COVID pandemic, the ATO got quite lenient on collecting taxes and let people run up large tax debts and activity statement debts as well. That crunch time has come, and the ATO, we've seen the enforcement action increase substantially over the last 12 months. So look forward to increased ATO action in the future. Penalties, which in the past have often been waived, are being increased. General interest charges on outstanding debts, which again previously were quite easy to waive. We've now seen the ATO blanket deny all sorts of requests, including those that are quite reasonable. And also look out for the ATO being stronger in terms of its audit activities and chasing down what it thinks is the amount it's owed from small businesses. So what can you as a small business do today to make sure that you remain compliant and that should the ATO come knocking, you can send them on the way pretty quickly? Well, firstly, good records is an absolute must. Keeping invoices for BAS purposes, keeping receipts and other documentation correctly, making sure that your accounting records are up to date. That's the first piece. Secondly, documents like loan documentation, file notes, tax decisions, making sure these are what the ATO call contemporaneous, as in written today, not 2 years after the event passed. They're really critical to making sure that your tax records are up to date. So speak with your accountant early. Make sure you keep all your records correctly. And if the ATO does come knocking, make sure you get on your phone to your accountant as soon as possible to make that process as smooth and as easy as possible. Finally, one last tip. If you've got business insurance, a lot of business insurance policies include tax audit coverage and tax review coverage. It's quite specific, but often it covers the cost of the additional work your accountant and or lawyer might need to do to fight an ATO review or audit. So check your policy, and if you're not covered, give us a call because we have firms that we would recommend help you cover.